I want people to learn a daily structure, and that's just
Mm-hmm.
reading candlesticks. Um, I think I got that labeled in the other chat. I have a chart up there and it's numbered. It got like 6 steps. It says consolidation on it, stop hunt, sniper entry, reversal, back into consolidation. There's 2 charts in there like that. I want people to be able to mark that up themselves and send it in the chat. You can pick any day. It needs to be on a 15-minute chart. It don't matter what day. You just need to be able to recognize it. So think I'm gonna go ahead and put the screen back up.
Okay.
If anybody else needed that, I hope you got it. If not, I'm playing, and I have to help you
Appreciate
later.
it, brother.
Let me see. Whoo, I could have held that. Anybody still holding that? I made mine get out at 40 pips. I already had put the TP while I was showing you everything. So what was the instrument? Yeah, I got in the 1840.
I just got out again.
Yeah. So mine's got out at 36 anyway. Yeah, this is what I was looking for the first time. It hit that 30-minute blueberry. Bam, perfect. High of the day, divergence. Your RSI is coming lower and lower while the counters were going higher. They did the opposite of each other. That's the easiest way to spot divergence. Like the counters were, the RSI was going up. On your RSI, this looks like the high of the day. And so at that point is when it showed divergence. When it went higher, the RSI actually started to go lower. Green crossed the red. That was the first sale actually we caught earlier when the call started. But it came in here, it bounced off the red on the TDI and your price line. And just it came up to it, respected it, it bounced back down, could be making a bigger M. So that was the move right there. Now this, I don't know how far this one will go. It can still come for the low of the day. I still believe the overall trend is an uptrend. But I hope everybody got their bag on that one if they didn't get the first one. Marta Rocker, you came in at the right time.
Facts.
Mm-hmm.
Facts, because I was definitely looking at it for a sale. Then I was thrown off because it looked like it was about to rise, in the TDI. And I was like, wait. I'm not sure. I don't want to just mess up my account.
Mm-hmm.
I've been trying to listen to my instincts better, right?
Now, well, it's starting to wick. I always look at this on how to secure profit or what I'm looking for. Like, if I'm looking for an M, this was your first part, and that was the bottom, the low of the M, so to speak, the first leg. If it does a second leg, I always look for it to come back to that area, minimum, to where I want to start taking profit. Like it should get no further than this before I start taking profit. Like don't let it get here and don't take anything. You know, of course you take profit before that, but once it reaches this point, you need to take some kind of profit. Now, once to do a real M, it'll pass that point. And now that's when you start going for your next lows. Like this area would be your next target, then your lower the day after that. See if it come for the low of the day. It can come down here and bounce right back up. So if anybody's still in this, or just explaining how you would look to secure profit in your trade. That's what I look for. Also, the mustard is a good first TP. When you have a sniper entry up here like that, it was that 1840. I know when I entered. Um, but the mustard was at 18. I'm gonna give it about 38. From the top, that would have been 50 pips already. That would have only been about 20 pips from my entry. But it depends on where you get in. But the mustard is usually a good TP as well. Like if you noticed on all of these, every time we get to the mustard, especially if you're going for 20 pips, you can use that. When they hit the mustard, 9 times out of 10, you're at 20 pips. When you got the high of the day or the low of the day, a sniper entry. Even if you like caught this buy here, got up to the mustard, it probably ain't 20 pips, but it was just about, you can get close to it. That's good for people that's going for 20 pips. Or even if you got bigger lot size and you want to take some of it at the first 20 pips and still stay in for 30 or 40 or whatever you're going for. And this is also, let me see. Oh, no, I'm not going to say that. They could keep selling them. It could pull back maybe half of that and keep dropping. Okay, now that it's done this drop, new candle form, it's at the water. What it could do is come up to the mustard and from there continue its way down. So that would be the continuation move. I'm gonna resend in my chart for the 6 steps I was talking about, but that's pretty much what you'll have to point out. You'll need to be able to recognize that. So for example, this day ain't over with, but every day begins and ends in consolidation. That's what your period separators are for, to separate your days. These separate the days up to the hour chart. On the 4-hour chart, it separates a week, and then it starts to go to a month on your daily and so forth. So on your 15-minute chart, it would have been consolidation, stop up to the low. That would have been your sniper entry. So that would have been step one is consolidation. Step two is where you recognize the stop hunt. 3 is your entry. And 4 is the continuation move. Every time it bounced off the mustard, it just pulled back and kept bouncing up. It gets to the end of the move where it's a reversal. Ain't no telling what it's gonna do, but so far, this is what this has done. Where this would be your reversal, and before the end of the day, it goes back into consolidation. So that's how yesterday played out. Even though this went up and dropped, I can count this as the stop hunt because what it did was it was a stop hunt for the previous day. Basically, whoever was in these buys, it came back for them the next day. If anybody caught this buy and was holding it, it came back down to take them out. Hit they stop loss and profit, whatever the case was, or they still had they stop loss at the entry, or whatever the case is coming to hit stops. So the way the next day played out was it was consolidation. This could be considered a stop hunt. This could also be considered a stop hunt up here. And then that was a sniper entry. And every time it hit the mustard, it shot down. But for the sake of how the whole day played out, and plus of the session, because this is the opening session, I really don't. It comes with skill. I was gonna say I really don't suggest trading this time of the day until you're able to recognize these 6 steps. You'll need to be able to recognize the stop hunt, the consolidation, the stop hunt, drop. It could have reversed and went back into consolidation. But the way I would really look at this is consolidation, stop hunt to the low, because it came for yesterday's stops. That was a sniper entry. It was a continuation off the mustard. It didn't really come back down to it, but it held that area. Um, and when it made its high today, it reversed and went back into consolidation. So this would be step one, consolidation. Step two, stop hunt to the low. Step three, sniper entry. Continuation off the mustard. Reversal at the high of the day, back into consolidation. And that pretty much is the step every day. It don't always look the same. It could play out crazy. Consolidation, stop hunt low. That could have been your sniper entry. This could have been your sniper entry. It was just retesting the low, but holding the low. It wasn't coming back down there. So it finally took off. That was your reversal right here. At the end of the day, back in the consolidation. It plays out like that every time. Consolidation. This one would have been your stop hunt to the high. Drop. Your sniper entry. Continuation off the mustard. At the end of the day, it reversed back into consolidation. Now you're looking for stop hunt to the low when you're looking for a buy-in market, and a stop hunt to the high when it's been selling. So, gold was dropping like for weeks until what was that, Friday and yesterday, basically, when it retested the low. So if you look any time before that, most of the stop hunts are going to be to the high. Consolidation, that could be stop hunt to the high. It's hitting the stops for people that are in sales, people that are holding sales at the high of the previous day. And their stops could be anywhere up in this area. Once it hits them, it takes off. That was your high of the day. That was your continuation. It came to retest that high, continued again. That was the low for the day. It held that low and reversed back in consolidation at the end of the day. It can look as crazy as it wants, but it's going to be the same thing pretty much. Unless it got a day, it just stayed in a range of consolidated all day. But this one's crazy. If you don't recognize it, don't trade it. But this could have been consolidation. I remember this day, actually. I didn't catch that. I should have. I remember that. Yeah, because if I'm right, yeah. I remember I tried to catch this buy, looking for it to hold the low from the previous day, and it didn't do nothing that day. Consolidated, did some wicks up high. That was your stop hunt. Stop hunts could be 20 pips. It could be 50 pips. But it's best to wait till you recognize that move exhaust and you're looking for your wicks. You're still sticking to your TDI, your high today, low today, knowing what's the overall trend in a market like this. I would have been looking for sales. So when it makes those moves up to the top and it just wicked like that, once it was done, because the wicks got lower and lower, that was your sniper entry. Drop, continuation off the mustard. That was your low of the day that was set. And this is where it get crazy. This actually, it can repeat. I did 2 charts. It could repeat. It could reset. This could have been another stop point and another sniper entry back up to the high. And then that's the reverse back into the consolidation at the end of the day. This played out a little crazy. It could be more than one sniper entry because you can always catch the high of the day or the low of the day. It did a low of the day, double top, that's a W. Double bottom, I meant, that's a W. You could have caught that. That's a perfect morning star. Got your good red candle right here, your dojis right here. And this buy candle was about the previous length of the sell candle. So that could have used that as your entry and bought that and took that back up to the high of the day. Once it got to the high of the day, it wicked. It came up, retested it, wicked again. It's holding the high of the day in the sale market. That would have been another good entry for a sale. Continuation. It didn't want to make a new low. That was the reversal for the end of the day, back in the consolidation. It can play out different ways. But if you don't recognize it, just don't trade. Don't force a trade.
I got a question.
Go ahead.
Okay, so the sniper entry, is basically where, not all the time, but most of the time, it seems like it's where them green arrows is, right? But no.
The arrows is just a ketchup crossing the mustard.
A what?
The ketchup, the moving averages.
Uh-huh.
I call that ketchup, mustard, water, mayo, blueberry.
Okay,
That's
and
what
it's
go ahead.
okay. So you're saying that's when they cross, or they at a certain range
Okay.
from each other, or
Basically the way the moving average, the arrows don't mean nothing. That I don't use them arrows. I need to take them off.
okay,
I need to take the arrows off because people always, oh, what's them little diamond shapes? I don't know. People be asking about that. Well, I don't use it. But basically, when everybody was first hearing about this strategy, the whole thing was the ketchup crossing the mustard, which is your moving average is crossing. If the ketchup cross the mustard going up, it buys. If it cross going down, it sells. Crossed up again, it buys. And that's what that is. These arrows are just pointing out every time it cross. It crossed up right there. It crossed up right there. It crossed down right there. That's all those arrows are doing. And that's like, that was the beginning level of the strategy.
Mm-hmm.
We're still looking for, we don't look for it every single time it crosses. We're looking for a W or an M. So like in this situation, it wouldn't have been the first time it crossed. It would have been the next time. You need to be able to see a W or M. If you can't see it in your candlesticks, it needs to be the green line, your RSI, on your moving average, on your TDI, I'm sorry. It needs to be, the green is what the candles do. If you don't see a MRW in the candles, hopefully you see it on your TDI, the green line. The basis of what I do is I'm looking for M's and W's. Like this right here is a W. And then that could have been your entry on the second part of the W, which would have been right here, and you would have took it up. It came down to retest it. It didn't break a low. So if you entered anywhere in here and had your stop loss down here, it would have took off. You would have just held that trade.
Okay.
So yeah, that was the beginning level of this strategy. The green, the ketchup crossing the mustard. But what that's pretty much was a late entry. Your TDI is almost the same as your ketchup crossing the mustard, except it's the green crossing the red. The difference is this happens down here before it happens up here. And so it's a earlier sniper entry.
Okay.
Yeah. So even like the arrows down, do it show it? No, it don't really, not every single time. Okay, your ketchup cross the mustard going down right here. That's why the arrow there. If you go down to your TDI, the green cross the red right here.
Right.
So you would have been in this sooner before here. It already done dropped. You know, it's like, shoot, what was that? That's more pips than a look. 20, you know, it dropped like 30, about 30 pips already before they catch across the mustard. You would already have 30 pips using this.
So you really want to enter, you rather enter it on a TDI?
Yeah.
Okay.
Yeah. And what this will help you do is realize, okay, you're in the right direction. You can hold your trade. You can use it for that. You can enter again. It depends on, you got to have risk management, know what your lot sizes and all of that are going to be. Or you can pretty much just hold that trade. If you happen to miss that and you see that, you can go back to using, okay, catch across the mustard. Let me take this the rest of the way back down. So it's a lot of ways to use it and piece this all together. All of these different confirmations, you could piece them together and, you know what I mean, come up with your analysis to get in your trade. The moving averages, they all pretty much do the same thing. They're just pretty much at different strengths. That's why the numbers are different: 5, 13, 50, 200, 800. They're all pretty much entries, TPs, your targets, your take profits, and they're where you can exit. So for this example, if you would have crossed right here, green crossing the red going down, your target would have been your water. You could have got out of your sell when it hit the water.
Okay.
At the same time on your TDI, the green crossed the red going up for a buy. So you would have got in at the sell right here and got out when it crossed back up for a buy.
Mm.
It don't necessarily mean sell and buy back to back. Whatever, you got to find your stop point. Like, I'm done for the day. But yeah, you start to piece that all together. It's the same here where you didn't get in this sale. Let's say, okay, it came down, consolidation, stop hunt to the low, and it hit the water's your trend line. The water's your overall trend line. So if you would have got in here for a buy, green cross the red right here, got in for your buy, it's like a W. I'm still looking for W's. If it's not a W, it could still be a V bottom or a V top or an A. Basically, for your M's, it will look like just the first part of an M. So you can call it a V top. If you go to the chat with the notes, it'll say V top, or it'll be V bottom. And okay, you get in your buy for here. You catch up across the mustard right there. This confirmation, you can stay in your trade. Every time it came to the mustard, it bounced off of it. Continuation move. Your green crossed the red going down right here. So I'm gonna put my green cross the red right here. That's at this point. At this point, you can get out your trade. I mean, if you got in right here at 23, let's say 24 was your entry, and when the high is 30, that's 60 pips. You can take secure profit right there and stay in the trade. You just take a partial, which is, take some of your lot size out. You can get out completely, whatever you need to do. The green crossed the red going down right here. The catch up never crossed the mustard again, though. So that kept going. It crossed again right here. You can wait till that happens. There's a lot of different ways you can do this. The most important thing is to work on your entries, manage your risk if it goes the wrong way, and stick to your pip goal, which is 20, 30, 40 pips for most people. Even when you're in big companies, it was always 30 pips and dip. That's what everybody, Steve Morrow says 30 pips, who made this whole strategy. Even the big, whoever, these big educators, they have ways of securing profit and stuff like I do to catch long-term trends. But the basis of it is just get your 20, 30, 40 pips. Some people do 50 pips, whatever it is, and at least secure most of your profit or something, maximize it as a day trader. That's on a day-to-day basis.
Okay. Okay. And do you ever because you've been breaking this whole thing down on a 15-minute, do you ever look at the higher time frames, or you don't really need to?
Look at all of them.
Okay.
On a day-to-day basis, it's no higher than an hour. When you're trying to see what's happening on a daily structure. But right now, I'm just gonna stay on the daily. Cause I do want people to go put in them 6 steps. I'm gonna drop that. I need to drop my example in the chat so you can see exactly what I'm talking about.
I was waiting for that.
Who was waiting for that? Who said that? Chief?
Me.
Well, go and drop yours in there because you're the only person that did it.
Wait so I can do this one.
I'm gonna drop that in there. Right there. Just go make your own version of that. I did mine on Instagram, whatever you need. And you need to be able to recognize that. 15-minute chart, daily structure. This is how I read price action. You know what I mean? So you got to know how to read these candles. It's not just all TDI moving averages. This is what I look for. My consolidation on a day-to-day basis. What's the first move out? The first move is usually the fake move, the stop hunt, just to trick you out. Everybody always selling this and they get in sales. Once they at their limit, they reverse it and do the real move for the day. And at some point, it's got to stop and pull back and come in. I'm gonna go to one example. There was one day we was just looking where that didn't happen. Something like this. It didn't consolidate. It just dropped. Sometimes that happens. But the thing was what it did for the. Oh yeah, that too. That was the one I was really looking at. But the concept was still the same. It was still a whole fake move down. Now you could have caught that if you was up and caught a sale or something, whatever, however it goes. But the whole overall move, if you stick to the timing of the day, um, London session and New York session, which starts at 3 a.m. Eastern time, that's what we're in now. The New York session, US session, is when the overall move is going to happen. You got some days where it just drop all day through all the sessions, and at the end of the day, reverse back into consolidation. But on an average, your normal, regular day-to-day basis, you're not even really trying to trade this time of the day. You're letting it play out and looking for the reversal. It came and did a low of the day, it reversed here, and that was the whole trend for the day. It came back again. Maybe people was in this buy, stop losses and profit, came and hit them, bam. That's nothing but a stop hunt. It was a wick. It didn't want to come make a new low of the day. It just was pulling back some of his money. Came back in, and at the end of the day, reversed and back into consolidation. It's still the same thing. And this can happen anywhere between like the last 4-hour candle, which is that's 2 p.m. Eastern time. So it's pretty much the same thing on a day-to-day basis. And if you can recognize this on a 15-minute chart, you can go to an hour, but the 15-minute, we're gonna do this on the 15-minute. Just on a day-to-day basis, trying to see this play out. I don't go no higher than an hour to look for that, where I'm looking for consolidation. Like yesterday, consolidation, stop her down to the low, did a W. That was the trend for the day, reversal back in the consolidation. It's pulling back up. I'm already out of that sale. I put in a TP anyway for 40 pips. It been knocked me out. Are you understanding that? Anybody got any questions about this? If you have not marked up a chart like this, please do. It's for your benefit. And drop them in the chat. This will save you from getting in trades too early, or really from that, sticking with the session, because you know what you're looking for at the time of the day. If you go look at a chart at market open, you know it's consolidating. You know that first move up 9 times out of 10 is a fake move. It's rare. Sometimes it does happen where that's the move for the day. Something like that was a fake move up, but then that was a sniper entry at that time of the day, and it just dropped the whole day. But it don't usually always play out like that.
You said this is recorded, right?
Yeah.
Okay.
I'm gonna have to edit this up and all this, but I'm gonna definitely drop this video. And the thing is, once you understand this, once you can recognize this on this 15-minute chart, it does this same thing on every time frame. I can go to a 4-hour. It could be something like this. Let's say this really want to buy. This could be a consolidation area because it's been rising. Consolidation, your stop hunt was up high. Drop. It could be like, well, actually, this was the stop hunt. Consolidation, stop hunt to the low. It rised up. That was your sniper entry. for a drop, and it was a continuation off the water, just like it's the mustard on the 15. And every time it came to it, it dropped. That could be the reversal. It's reversing, and somewhere it's gonna go back into consolidation until it wants to. It could. I think it's gonna continue the uptrend. So then that's when other things come into play, like the levels and stuff like that. I'm not gonna get into that today, but I show a little bit of that on the 15-minute chart. But it does it for the. You need to recognize it on the 4-hour for the weekly. So in between each period separator is a week. Let's say it got it labeled Monday through Friday. So it does that on a weekly basis where it consolidates. When it's going to make a high of the week and a low of the week. It made the high of the week here and drop. Once it made that low of the week, it reversed back to consolidation. It did it again, consolidate. The fake move was up. Once it did that, it dropped. It dropped for the week. It kept continuing off the mustard. Once it made that low of the week, it reversed back up, back into consolidation. It did the same thing every time frame. That's when you start catching longer trades, long-term trades, swing trades, or position trades. That's when you go to the higher time frame. If you don't get this on the daily 15-minute chart, you're not going to be able to spot it on the higher time frame. You have to work your way up. But it's the same thing.
Sometimes I just have trouble seeing the 3 levels, but I know I see it, but then I don't know. I guess I'm not always sure about what I see as the levels.
The levels, really, you're just looking for the market to do the same thing 3 to 5 days. That's
why, I do know that. I do see that. I know what you're talking about. Yeah.
So that's why even now, so far it's been rising for 3 days. It could keep going for the rest of the week.
Right.
But that's why, it did it out of session. I wasn't looking at the charts when this happened. But back to the 15-minute. Let me see. Let's see how I can get this, if I can show all of this. That was the low. That low was set. It was Friday. Low, they did another low Monday to just weaken it. This was the reset of the downtrend. That was the second leg of the W. So when it finally made this low on Tuesday for the week, that was the first level. And then that was consolidation. The second level started at the beginning of the day. Basically, when you're looking for 3 levels in a buy, you're looking for the low of the day. Even though we caught 2 sales today, if we had caught the dip, we would have got quicker, stronger moves. Like if I would have seen that, we could have caught that. Bam. That happened before I got up. We had seen that dip, that pulled back to the water. That would have been another buy. So
okay, I see that.
Yeah. So if it's going to continue an uptrend, I'm looking for the low of the day tomorrow. Whatever that low of the day is, I'm looking for that to buy the dip back up. That's how the levels play. And once the 3 to 5 days is up, it can reset and keep going, or it reverses completely. That can take a day to play out. The biggest thing is recognizing the high of the day and the low of the day. What's your overall move? Still recognizing the price action, the consolidation, stop up to the low, rise, reversal, back into consolidation, is recognizing that and your candle patterns, your reversals, your wicks, and place that with your TDI and just wait on the move. You said sometimes you don't recognize it, but that's the times you don't trade. You trade when you do recognize
it. Okay.
If you don't trade for the day, you just didn't trade for the day. It's better to do that, get you good 3 trades out the week or something like that and be done. It don't have to be every day. I like doing this for fun. That's why I do Monday to Friday. I just like trading. So
it's dope. It's dope.
I might start doing, I don't know. No, I ain't gonna say that. It's all just knowing how to risk your manage your account, know what lot size you're going for, what's your pip goal, and what lot size you need to make that amount of money when you hit that pip goal. Once you got that figured out, everything else it's just you do it on a day. It's a day-to-day basis. And this, I'm done. I ain't getting in there. I don't care what this do for the rest of the day. Also, you do have to. All of this is in that chat too. There's a New York session, basically like a schedule. Once it gets a certain time of the day, it gets slower and the moves get smaller. It's done. That 8 o'clock, that 3 a.m., 8 o'clock, 9 o'clock time frame is when the biggest moves are happening. That's when your entries come in. And it's nothing to make 40, 50 pips, whatever you're going for. Now it's gonna take its time with it. And the next hour is gonna be extra slow. It's gonna start consolidating.
So what what was the time frame that I'm sorry, what was you said what time in the day? You said 12 o'clock your time, right? Eastern Standard Time is when you say you notice it gets slower.
Yeah. Yeah. Y'all want me to be honest with you, the best times of the day to trade is when we on these calls anyway.
Mhm.
The only other
Right.
time, yeah, that's why I trade at these times. I trade at the time it's best to trade, not because this is when I want to trade. So
Right.
I know these time frames is different for some people, but if you want this to work, you got to make your schedule according to when the market moves, not when you know. You got to put in some kind of. That's probably the only sacrifice
I've been
because
doing, trust me, trying to see if it's any other time, and this is the
it's
time.
not. Yeah, because you in California, so
Yes.
the only other time that is good to trade where the markets is fast is somewhere between 3 to 6 in the morning. I really
Right.
would
That's
say,
European open.
yeah,
Right.
it's the London session starts at 3, but if I had to pick a consistent time, it would be like 6 o'clock. You know what I mean? And so I'm usually up that time anyway. The New York session is a good time, kind of for everybody, because it's like that's the best you're gonna get. Be honest with you.
That's
uh,
is it 6 or 7? 7 o'clock. Your time.
what did I say, Chi?
You said something.
Exactly. I ain't messing with you, Chi.
I know. I just was wondering about the 8 o'clock. That's why I said that.
No, I always start at 8 because I mean
So
I feel
6,
I need to be
realistically. Okay. All right.
technically I'm already up. I mean I'm already sometimes I'm already in trades. But you just
Yeah.
gotta find a window for yourself.
Like 6 to 9 ish. Your time is probably the best time, pretty much.
Okay, so 6, because I'm in Arizona, so 6 your time is like 4. And you saying that sometimes you find yourself in trades around 6 your time?
I can. Yeah. I don't typically I don't know. I try to come up with a schedule where I'm not doing too much for myself and I can do it consistently every day. So if I miss it, I just missed it. I know when I look at 8 o'clock, 9 times out of 10, I'm gonna find something. I never had no issue doing that. So I might wake up an hour earlier one day or something. I might wake up an hour later, whatever. I'm usually up 5, 6 in the morning. But I don't go look at these charts. Not the first thing I do in my life. you
Right.
know, I need to look at them, but I don't do it like that. I wake up and I gotta wake up. But you gotta find, your sweet spot for yourself. That window where it's like, okay, I could do this consistently, and really, it's somewhere in between that 6 a.m., 8 o'clock Eastern time, because that's when the sessions gap. I need to find a good chart for that. You can always look these up, Forex trading sessions, and put in your time zone, and it can map, it'll be charts, go to images or something, and that'll be in there for you. because there's a overlap. I'm not sure there's that times myself, but London session for me starts at 3 a.m. and I think it ends at 10. I'm not sure when it ends, but London sessions, not London, US session starts at 8. So they have an overlap, and that overlap is when the market is the most active. That's when it moves the most. That's why I wake up and trade that time. If you have to trade after that, that's why this whole 6 steps things that I'm telling everybody to do is important, because you know what you're looking for when you look at the chart at a certain time of the day. If you come in and you see all of this, you're not looking for a buy no more. You're looking 12 in the afternoon or later. Now you're looking for the reversal before it ends the
Yep.
day. And that happens within the last 4-hour candle. You got to take note of when the 4-hour candle starts for your time zone. Eastern time is 2, 6, and 10. It's AM and PM. The 2 o'clock is another 4-hour candle. It's 10:51 for me. So a 4-hour candle just started almost an hour ago. So I'm looking like, what is that 4-hour candle going to do? So far, that 4-hour candle done came all the way down and wicked back up. This look like it can just keep shooting up. So the next 4-hour candle, I'll be looking for the high of that candle for it to be the high of the day in reverse. Back before the day ends.
In the I put some charts that I found online in the WhatsApp. But from what you were just talking about, yeah.
Yep, that one's good. 6. What is this one? Yep, 3 a.m. Yep, I can read that. Yeah, that's good. London and New York are your fastest ones. That overlap is the best session. That's when it gets the most moves out of the market. I will also say that's another reason why I do like to trade gold, because other pairs move according to their session. Gold is a London US session pair. It's going to move big moves that whole time anyway. Some of them, they might start to slow down when New York session comes in. It depends on the pair. So with gold, you really don't have that issue. I do have there's a chart for that, explaining gold and how it moves throughout the day. When it makes the biggest moves, about how many pips it'll do for each session.
Yeah, where's that chart?
It's all in there. Yeah, you really gonna have to dig deep into this.
Okay.
It's all in the images and stuff. You really just have to. The images are
Oh, I think you did put in some stuff that shows. I think I know what you're talking about. Yeah, I have that.
You don't. I did.
Yeah, I have it. I was just looking at that like yesterday. Don't mind me.
Yeah, it's in there. Let me see. You got me looking just so I can send it. But a lot of these pictures, though, they're just not scrambled around either. They're kind of in some kind of order, like definitions, tips, the candle patterns. All the ones in gray are stuff from Steve Morrow, just like tips, timings. Those are important.
Yeah, I just weekly try to go over them and stuff.
Mm-hmm.
Get it in my head.
Take the time to go through that on your free time. U.S. session characteristics. I'm about to send that in. That one. You got your Asian session. This is when the market opens. That's your stop hunt time. Asian session. That's when the market opens. You're looking for a stop hunt. 20 to 30 pip moves. not big moves. Then the London session, European session comes in 90 to 150 pip moves. Then the US session is when you catch the rest of the continuation of the move, got your overlap. And once that's done, let me see, because it's in military time. 7, 12, 5, no. It would still be noon. Basically, with that overlap, when that's over with, is when it starts to slow down, which is noon Eastern time. Your 4-hour candle starts at 10. So it's like half of that 4-hour candle, 2 1-hour candles. Another thing I can point out is that the market, it moves one big way for most of the day. You get, how's it do this? 6? Is it 6? Hold on. I'm saying tripping. I'm trying to count the 4-hour candles. Basically, you can catch 2 4-hour candles in a day. That's another way to start to look at how long should you hold your trade. Or 6 hours. It could be a whole 4-hour candle and half of another 4-hour candle. It's like if you got a 4-hour candle starts at 6 in the morning. You can catch it. You can hold, like if you caught an entry at 6 in the morning, you can hold that all the way to the end of that 4-hour candle at 10. If it continues, you can hold it until about 12, which is half of the second 4-hour candle, 6 hours. At 12, it starts to slow down anyway. So you can always, that's how I go through the time frames basically. If we got into this trade, like I could look at yesterday, for example, low of the week, and we got in this trade at this time. When was that? That was 8 o'clock. When you go to the 4-hour chart, that's this candle. It came and made a low. We could have held it for one whole 4-hour candle and then another 4-hour candle. After that, it consolidated. So you can start to use the 4-hour chart and a 1-hour chart after you got your entry, just to see how those candles are going to play out, to let you know how long you can hold your trade before you see that reversal at the end of the day and you're done. If I had caught buys, we could have just held those, because the buy is the overall trend. I wasn't able to catch a buy, so I was able to spot a sell, get my 40 pips, and get out. I think that's it. I don't want to do too much for today. Yeah, they done. That's it. Y'all good. Y'all all professional on here. Y'all don't need no help.
This the money making crew right here.
Mm-hmm.
We fly gold.
You got one newbie. Mm-hmm.